Hello, everybody. We are excited to bring you this workshop, webinar sort of thing. I'm here with Cyndi Thomason. She is a regular contributor to the InventoryLab newsletter, to our blog. She's also the founder and CEO of BooksKeep. She is a certified Profit First practitioner. And we're going to be talking about Profit First because we have some really exciting news. Cyndi's going to be launching a book very, very soon that we're excited to see. And I've actually had a chance to take a look at it, and I can't tell you enough. It is packed cover to cover with just actionable step-by-step tools for folks. But first, we're going to talk about something a little bit different, and we're going to talk a little bit more about Profit First for e-commerce sellers, the title of her new book. So first, hello, Cyndi.
Hi, Kim. Thanks for having me.
So one of the things we wanted to talk about was specifically not just InventoryLab, but we're talking a little bit even more about QuickBooks and Xero. So we get a lot of questions, I know, things like, well, do I need to, keep using QuickBooks now that I have InventoryLab? And the answer to that question is, depending on your business, yes, it is kind of important. But first, let's talk a little bit about QuickBooks and Xero, and because they are a little bit different, and somebody might want to choose one over the other, I'm assuming. So can you tell us a little bit more about that?
Well, in our firm, we use both. We have clients that came to us using Xero, and we have clients that, came to us using QuickBooks Online or desktop. We prefer QuickBooks Online because we're a virtual practice. So that's really where my experience is and what I'd like to talk about. Both Xero and QuickBooks Online are available online accounting software packages, and both of them do a really great job. The differences that we found between them are two or three things I'll mention. One is in QuickBooks Online, there is the ability to do what's called a reconciliation. And reconciliation in this term, in this case, means reconciling back to your bank statement or your credit card statement. So it's the ability, of a tool is provided so that you can go back and actually put in your statement balances and click through the transactions to be sure that you've got all of them. And at this point, Xero doesn't function like that. They do use the term reconcile. They talk about their product. What they're talking about is actually downloading transactions from the bank into the books. And of course, QuickBooks Online does that too. In our firm, we call that coding or categorizing. It's not really reconciling. Reconciling is when you go back and, in day anyway, when I learned to balance my bank statement, you would take your check register and compare it back to what the bank said you had. And that's the function that we're talking about. So QuickBooks Online has a tool for that makes it fairly easy to be sure you've got everything. And Xero, at this point, have something like that. You have to do it offline, which we do, and it's not a big deal, but the tool is kind of nice. The other thing that's different are just the reports. The reports in QuickBooks Online, I think, are more intuitive to go in and specify the time periods, the way you want them filtered. I just think it's easier and more intuitive to do to get your reports out of QuickBooks Online than it is out of Xero. But that's really a personal preference thing. I know the team members in my firm that with Xero all the time, they're very proficient at it. It's not a big deal for them. If they go over and work in QuickBooks, they have to stop and think. So you get used to that one way or another. So that really is kind of a personal preference thing. I just find it easier for the way my brain works. The other thing is, I think people should consider their CPA. And if their CPA is going to log into their books, they just need to be sure that their CPA is comfortable working in whatever format they choose. QuickBooks is more prevalent in the United States than Xero, but Xero has a lot of business now. It's really grown over the years. So I'm seeing more tax service providers being comfortable adding Xero books than they were a few years ago. But if you've got a CPA that you're comfortable with, you just want to be sure that they're going to be comfortable with the software that you choose.
That makes total sense. And that it's actually a really good segue into my next question. So InventoryLab, we have really the end-to-end core function tools that e-commerce sellers need for Amazon. So you're able to research profitability for products. You're able to list. You're printing your labels. You're creating shipments and box contents, and then inventory management. That component, that piece is there. It's very important. And then we also have profitability reports and the ability to account for your cost per unit or your buy cost, and then of course your COGS or your cost of goods sold, as well as other expenses, and all of that's going to funnel through to the profit and loss report. So all of that's there in InventoryLab, which makes it understandable that people would ask the question, well, do I need to still use QuickBooks or Xero because now I'm using InventoryLab, or vice versa? And of course, the answer to that question, again, depending on your business, it is yes. But we talked about this before about why that's important. But in your book, in Profit First, you had kind of touched on integrations, and the integrations are great. But when it comes to tools like InventoryLab and QuickBooks or Xero, that you think it's a better idea to not have those integrated, but to keep them separately. So can you tell us a little bit about how it's complementary, how InventoryLab and QuickBooks, for example, would be complementary to each other, and then a little bit more about why you think it's better to kind of keep them separate?
Well, the way together and the way that we use them together with our clients is our clients are really keeping up with InventoryLab. That's kind of their system for keeping all of their product information up to date and getting it Amazon. All the things that you mentioned, that's where they do their work. They don't do as much in the books as we do, for example. And so, but there comes a time at the end of the month, or for our clients, every time they have a settlement from Amazon, we light up what's happening with their COGS at that same time. So we want to take out of inventory anything that's been sold, get it off of the balance sheet, and put it into their P&L. So InventoryLab is our source of data. So they're doing all of their work in InventoryLab. We can log in, get their information, record the necessary financial transaction at the time that coincides with when they're getting their settlements. So that's how they're complementary. So for us to know that we can go in, that our clients are keeping InventoryLab up to date and current, and we can pull off the information that we need to be able to get their financial books current. The reason we don't recommend integrations with most inventory management systems and QuickBooks Online is because inventory systems are being maintained by warehouse personnel, and things can go wrong at that point. You've got multiple people touching those products, touching those listings, and if there is an error that gets introduced into that system, we don't want it to automatically be ported over into your account. Any kind of problem in either system to not damage the other system. And the reality is we really only need a couple of data points a month out of that system. So continually providing information and every sale and all that activity back and forth between the two pieces of software is essentially creating two pieces of software that have the same information. And then there's the challenge of keeping them in sync, and if they get out of sync, getting them reconciled. So and both as cloud applications, while they both have extensive capability in terms of storage, the reality is as you over time add more and more to those systems, you just have to imagine that's going to degrade the performance at some point. So why create two systems that have the same information that causes you to have to reconcile, that could introduce errors across systems that could be prevented for basically two sets of data or two data points that you can easily pull out and make the entry that you need to make. So that's our reason for not recommending the integrations.
And that's a lot of a lot of the work that BooksKeep does, the consulting work that you do with your clients, and in the Profit First for E-commerce Sellers book. One of the things I love about it is that proactive approach, as opposed to, leaving yourself vulnerable to a mistake, which will inevitably happen. You're working with humans. We are flawed people. And so, compartmentalizing that, or keeping that mistake in just one software, as opposed to having a mistake upstream affecting all of these other, data points downstream, it's much easier to correct it, and also avoid having that spread, metastasize throughout your books. You're keeping that limited to just that one. I think that's so smart. So also, we were talking about that in BooksKeep, that y'all are able to access InventoryLab accounts. So InventoryLab users are able to add 2 sub-accounts to their InventoryLab accounts and give access to people like accountants, or sometimes employees, like maybe people outsourcing for them. But you talked a little bit about accessing their account for one thing, but I know that there's another kind of primary reason that that's really helpful. Can you tell us a little bit more about that?
Yes, well, it's important to get the COGS information up as the sales activity is registered in your books. But things can happen over time. There could be lost inventory, there could be damaged inventory, refunds. There's a variety of reasons why over time recording that cost information may be accurate at the time, but your actual inventory that's on hand is different than what may be recorded in your financial records. So once a quarter, we go back into our clients' InventoryLab accounts, and we true up to their actual inventory records, not just looking at what's sold, but we look at what they truly have on hand. And so that quarterly true up allows us to ensure that there's points throughout the year that we're looking back to the source, if you will, of what truly is on hand that we can get out of InventoryLab. And that allows us to make any kind of write-offs that may have to occur during the year. We're making them in smaller pieces so that our clients are seeing more accurate data throughout the year, not waiting till the end of the year and booking one big entry, and it may throw their profitability off for the whole year. They've been operating on one assumption about how they're performing, but when you have to make a big write-off, that can really throw your numbers. So we don't want to do that all at one time. We try to do it quickly to make sure any kind of anomalies that have happened are recorded throughout the year.
Which makes total sense. Instead of waiting to do that, we have a lot of folks that like to, they go into their InventoryLab accounts, they want to, export that P&L, and then they also want to export their inventory valuation report, which of course is their on-hand and inbound inventory's value in buy cost. But doing that, for December 31st. But instead of, waiting to do that at the end of the year, because of course the inventory valuation report too, that's like one of the only places in InventoryLab that is not retroactive. It's a snapshot that's taken every day. So having that, checking in on it, making sure everything, reconciles the way that it should throughout the year, eliminates any risk, to finding out that maybe you hadn't done it correctly, and having, being able to also then see that throughout the year helps you have a better idea of kind of where you stand, which is always what you and I talk about all the time. And, we kind of like to talk about more than just like knowing your numbers. Well, what does that mean? We talk about that a lot. That's really important to us.
It's like going on and you don't look at your map when you arrive to see if you're at your destination. You check on it. You check your map period on your journey. And it's the same thing. People should be doing that same thing on their numbers. They should be checking in to see, okay, it's telling me something that I can relate to, that's making sense to what I think is happening in my business. And if it's not, you need to investigate it, because it can materially impact your profitability for the year.
Yeah. And you and I both know that, a lot of folks, I know we're going to talk about this in another workshop when we talk a little bit more about Profit First for e-commerce sellers, that you do see often that people kind of come in as a BooksKeep client saying, well, this is where I stand as a business. Here's my numbers. and they find out that that's not the case, that they have missed some small things upstream, or even like really big, kind of pieces that really just kind of throw them off. And really, a lot of I think some of your best work is done getting those folks out of the ditch, back on track, and setting them and being able to look at their journey, and where they are now compared to where they were. It's just so important.
Well, and it's the it's the set it and forget it mentality that I think a lot of people have when they're dealing with the listings in InventoryLab or on Amazon. And when you, it's a big deal to get everything together and get it listed, and but it's not the end. It's things change. Your pricing may change. If you've got a repricer, things may change. And people, if they set their information and don't go back and periodically test it and evaluate it, they believe they're operating in one. In fact, they may be operating in a different world. And as you mentioned, it's kind of one of the sad things of what we do is they come in based on looking at some profitability information from a non-financial type of system like a Quickbooks or a Xero, and they think they're performing at, maybe my ROI is 80%. And when we get done preparing their books, everything in order, and we have to tell them, no, it's more like 19%. And then they want us to help reconcile why the difference. After doing that exercise many times, the difference is that set it and forget it mentality, because things have changed over time, but they've not gone back in and kept their InventoryLab records up to date. So that's another thing that people should just constantly or periodically, let's say, have it on their. Check your financial records and what your gross margin is telling you out of your financial system. Compare that with what you're seeing out of InventoryLabs. You want those things to be in sync, because I know people depend on InventoryLab data on a much more frequent basis. So if you're using that data regularly, you really want it to be in sync with your financial system. And if you've been setting your information in there and not going back and up to date, that's where it gets out of sync. And just make it a periodic task to go in, say quarterly, and just look, am I matching up pretty close here? Because if you're not, you're basing decisions on data that's gotten out of sync.
So what you were kind of talking about is that set it and forget it, and folks using InventoryLab and that listing capability. I could not agree more. I can't tell you how often I meet people at conferences, especially where they kind of come to the booth, or we sit down to do a one-on-one, and they kind of say, I'm using it for all of these things, but not this whole other half. And it's almost like a tipping point, the listing to everything after the sale. And really, one of the things I talk about pretty often when we do our regular webinars is that really that's where the power of InventoryLab that's where it all kind of comes together. I mean, the listing is great. The labels are great. The box contents, that's great. It gives folks the opportunity to grow their businesses, when they've outgrown Seller Central. But, we have people that have these expenses all over the place. They're, piecemealed, and until you get those all together, you don't know where you stand. You can't. I'll sit down with somebody at a conference and I'll say, well, where have you accounted for the airfare to get here, or the cost to attend this conference? And they're just not like, oh, I didn't know I could put that there. But also everything after the sale, and looking at that profitability after your repricer starts repricing things, that's going to affect that profitability. And kind of keeping an eye on that is so critical. And it's in the subscription. Use it. Get over that tipping point, and really use it for. I mean, there's so much value to be had there, and it's great to be able to list, and I love what we're able to do with that. But I want to see more people really kind of using those tools for everything after the sale as well. I couldn't agree more.
Yeah, I mean the data. I mean, I know what it feels like to complete a, but maintain and keeping that data good is what really allows you to be consistent and make good decisions going forward. And it's something, like you said, use that software to get good forward.
And it eliminates that fear factor.
Mm-hmm.
You know, a lot of us came to this without a background in business. I talk about it all the time, that was me, and I had no idea where I stood as a business. And when I do look back on that, I can clearly see that I walked as an entrepreneur with fear. You know, that I didn't know what was coming around the corner. And that's one of the things that we'll be talking about when we talk about Profit First for e-commerce sellers. One of the things I love is that you give them the tools to see around those corners and to be able to prepare for that and to, you know, reduce or mitigate that risk, sometimes entirely, you know, and just kind of getting in front of things. When you know what's coming around the corner, boy, you kind of running your business very differently, more as an entrepreneur, when you aren't feeling like, well, I know that there's things that I don't know, and hopefully like those monsters in the closet aren't going to come out, you know, at some point. You methodically kind of go through and eliminate those. And it's one of the things that I just love about the work of BooksKeep, as well as what you address in the book.
Well, thank you. And, you know, it's just nice to have a little runway to navigate challenges. As business owners, we're going to have the challenges. So let's have enough runway that we can afford to navigate through them. And that's what I want people to realize, is they can set their business up in a way that it doesn't have to be a big surprise. I mean, things are going to happen. There's suspensions, there's lost inventory, all kinds of things can happen. You just have to make sure that you're setting yourself up to plan for those things so that you've got enough runway to navigate those challenges that may happen. Because it's not that we don't know that something can happen. That's a known. We know that. So let's just prepare for it. And it makes your life a whole lot less stressful.
Yeah. Those things should not be devastating to a business.
Right.
They might shake you up a bit, you know, and,
Right.
and might be frustrating. And, you know, you might have to stop for a second and take a few steps back and kind of recalibrate. But those things should not be devastating to somebody's business. And so many of us, you know, have walked through those early days as e-commerce sellers, knowing that if the wind blows in the wrong, you know, the wrong way, that my business is going down because there's so much that I don't know.
Right.
And but you just kind of take them through step by step, and I just love that. So we have talked about your book a couple of different times, and now Profit First for e-commerce sellers is based on or kind of an offshoot from an original book, Profit First. Tell us a little bit about that and where folks can find that if they're interested.
Okay. Profit First was written by Mike McCallowitz. It came out in 2014 and was re-released. It was picked up by Penguin House and was re-released in 2017. It's the basic philosophical underpinnings of my book. I applied the Profit First methodologies and the philosophies to my clients that are e-commerce sellers, and found some tips and tricks and unique things about the way my clients operate in the e-commerce world. And so we customize how we use Profit First in that area. But the original Mike does a really good job in his book of explaining the behavioral philosophy and how we act as people around money. And so his book really goes into a lot of detail around that. I pulled excerpts that I found really helpful, that I felt like my readers really should understand that philosophical underpinning, and included that in my book, but then took it to, okay, this is how we make it work in the e-commerce space. And it actually came in the mail, and so I'm excited to actually hold it in my hand. And it's available on Amazon, and really anywhere books are sold. I've listed it beyond just Amazon, and so anywhere books are sold, should be able to get it by the 22nd of January. It's when it's launched.
So exciting. January 22nd, launch date for Profit First for e-commerce sellers. And of course, Mike's book, Profit First, the Profit First podcast is available as well. So how can folks get in touch with you if they want to reach out to you with a question, or if they even want to get a little bit more information about being a BooksKeep client? How can they reach out to you?
Well, welcome to go to my website, bookskeep.com. That's BOOKSKEEP.com. And my email address is Cyndi, I spell it crazy, CYNDI bookskeep.com. That's how people can reach me directly. We're on Facebook. We have a Facebook page, and there'll be a lot of information about the launch coming up on our Facebook over the next couple of weeks as well. So I would love for people to reach out if they have any questions. We're here to help.
We so appreciate your support of InventoryLab. InventoryLab is really just really thrilled to be able to support you in the launch. Are you going to be at any conferences this year, and are you going to have copies of the book with you?
Yes, I'm going to be at Prosper and ASD. I'm speaking. I think I've got 3 events that I'm speaking at ASD. Prosper, the Internet Marketing Association, and Source Direct. I'll be speaking at 3 different things at ASD in March, and I'm excited because I will have my book there, and I'll have the hard copy by then. We've got to order in for the hard copy, but it's not here yet.
So exciting. So Cyndi, thank you so much for joining us. You and I are going to do another workshop specifically about Profit First, and we're going to kind of even get into some of the techniques, some of those like major core components of the book and the methodology. We're going to talk a little bit more about that. But we are really happy to be able to have this conversation about QuickBooks and Xero and InventoryLab, how they can all work complementary, maybe why they should not be, integrated and kind of smushed together, and how that can really put sellers more in the driver's seat and giving them that empowerment to run their businesses. But thank you so much. It was so good to see you.
Thank you, Kim. I enjoyed talking with you, and I appreciate you having me on.